Welcome to Trading Nation. I am Brian Sullivan, joined by Steve Chiavarone, who manages Federated's Global Allocation Fund. And he joins us once again here on Trading Nation. Steve, a lot of people are talking about rates, but you think that the biggest sort of untalked about market story of the year is likely to be what?
Earnings. And we keep talking about earnings. Earnings are set to grow 20% this year. And if earnings grow 20%, our bet is that markets are going to finish the year much higher than here. 3,100 is our target.
3,100. So you believe that when the quarter comes and we have earnings season on CNBC, we're going to be talking about growth that is above current expectations?
Yeah, well, when we came out with $155 in earnings as our expectation, we were well above the street. And the street's kind of crept up to us. I think consensus is pushing that 155 number that we have. And that's 20% above where earnings were last year. And it's broad-based, it's strong, and it's supported by revenues. This isn't just financial engineering. You've got 8-9% revenue growth across the board. And so it's solid, it's sustainable, and we think it continues.
You don't believe higher rates will either scuttle that or at least compress margins and multiples enough that it won't matter?
There's a day where that will be right. That day is not today. We think that you've got to get the 10-year yield basically to its neutral rate. We think that's somewhere between 3.5 and 4. So, you know, we're all taught that the multiple compresses as rates go higher, and that's right after you get to the neutral rate. We're not there yet. We think the multiple expands until we hit, closer to 3.5%.
Okay, you're on the record here. Let's get some individual ideas. Why do you like a French hotel company?
Well, we like what's going on in France in general, and we're talking about Accor hotels. So what's going on in France is you've got the liberalization of the economy under Emmanuel Macron. And so we like that. We like the growth in Europe. We think valuations are good there. We like the idea that this company is going asset light. We think it puts them in a better position to compete against some of the non-traditional competitors like Airbnb as an example. And we like the idea that we're playing on experiences. We've talked about on this show the rise of the millennials and how that's going to impact the economy. Millennials spend on experiences. Hotels are an experience.
Yeah, parent company of Sofitel, among others. A little talked about name Rogers Corp. ROG, they make stuff for technology, not a household name. What do you find attractive about Rogers?
Well, what we like is, and this is a name we hold across our small cap growth funds at Federated, it's a play on the Industrial Revolution, which is another theme that we've talked about on this show before. We've got an increase in chip content. And this company makes specialty materials that are used for things like autonomous driving, 5G internet, automation, all the kind of technological shifts that we think are transforming the economy. And so it's a small cap play. It's not overly expensive relative kind of to the small cap universe. And the kicker is, it had a 33% tax rate prior to tax reform. Small caps in general have higher tax rates. Tax reform really helps here.
All right, your other pick there is J.P. Morgan as well. Steve Chiavarone of Federated, Accor, Rogers, J.P. Morgan, and bullish on earnings and the market. Steve, we appreciate your views on Trading Nation. Thank you.
Thanks for having me.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.